But Trump and Kennedy both had really positive messages for the Bitcoin community, especially Kennedy. I've listened to his speech now 3 different times because to me, he did a better job than even Michael Saylor at explaining the whole premise of Bitcoin and why it's important and his policies. He's got some pretty radical ideas like getting rid of tax on Bitcoin, purchasing 4 million Bitcoin throughout his term just to hold as the treasury, and keeping the Silk Road coins, the 200,000 Bitcoin that the government already has. He said he would keep those in the treasury. Trump said that too. Yeah, I think the outcome of this election is going to have a major impact for the direction of Bitcoin, at least, if not, everything in our lives. But these companies like Ripple and Greenpeace and the World Economic Forum are saying that Bitcoin can change its code and it could go to proof of stake too, and that would be a lot better for the environment. But it's just not possible. And I don't think the miners would ever vote for something like that because...
Sasha, welcome to the InFi podcast.
Oh, thanks, Bob. Glad to be here.
Well, there's a lot of material we can cover, so why don't we just jump right in here?
Yeah, I think the outcome of this election is going to have a major impact for the direction of Bitcoin, at least, if not, everything in our lives. But certainly for Bitcoin, there's been a big contrast of policy spoken. I was at the Nashville conference a few weeks ago now, and I heard from Trump and Kennedy, and Kamala was invited to speak, but she didn't take the opportunity to speak to the thousands of voters that were, tuning in. But Trump and Kennedy both had really positive messages for the Bitcoin community, especially Kennedy. I've listened to his speech now 3 different times because to me, he did a better job than even Michael Saylor at explaining the whole premise of Bitcoin and why it's important. And his policies are way different than anything anyone has ever said they would do as a regulator. He's got some pretty radical ideas like getting rid of tax on Bitcoin, purchasing 4 million Bitcoin throughout his term just to hold as the treasury, and keeping the Silk Road coins, the 200,000 Bitcoin that the government already has. He said he would keep those in the treasury. Trump said that too. But then right after the conference, the Democrats, whoever's in control of that wallet, moved it to Coinbase custody. The day after Trump and Kennedy said, we'll keep that as a national reserve, they moved it to a wallet that has previously been used to sell, it's where the government sells the Bitcoin from. So,
oh wow, that totally wasn't on my radar. I didn't realize that.
It hasn't been sold yet, so no one, everyone's just kind of looking at it are they just going to hold it there, or are they really going to sell it? Which would be such a shame but I mean that's what they do with Bitcoin. The current administration sees no use for it. They just they have an anti-crypto army.
Okay, so you mentioned a lot there. So yeah, I would say, just as an aside for people, if all you know from RFK Jr. is headlines and weird anecdotes, talking to Roseanne Barr about taking a bear and putting air in it or something, he's a very well-read man, and he's very intelligent, and he's talking about something that he knows about. He can go in depth. He's not like just, some glad handler shaking, hands and kissing babies or something. Whether you agree with him or not on a particular issue, even areas where I disagree strongly with him, he's a formidable debating partner or opponent, I should say. So he knows what he's talking about. So yeah, that doesn't shock me that, given that he was going to go to that conference and give a speech on Bitcoin to that crowd, that he would have done his homework and, know what he's talking about. Mm-hmm. So the fact that,
well, he actually is a Bitcoiner. He sold all of his winnings from the Monsanto case, where he won a giant settlement. I forget the dollar amount, but it was significant. He said it was basically equivalent to his life savings that he won in legal fees for winning against Monsanto. And he put it into Bitcoin right after witnessing the Canadian truckers situation where they froze their funds. That he said that was the moment it clicked for him, where he was like, oh, this asset you can just move without needing PayPal or GoFundMe to agree with the transaction.
Okay, so more specific, since the Canadian government had frozen the conventional channels for people around the world who wanted to support the truckers, people could still send them Bitcoin. That was the point. Right. And that's when RFK Jr. realized, oh, this is an alternate. This isn't just like a speculative investment. This is like an infrastructure that the authorities can't just shut down if they don't like the politics of somebody involved.
Yeah, uncensorable, ungovernable. Mhm.
Okay, got it. Okay, so can you speak then, like, why it's interesting to me that Kamala Harris chose not to go there. Do you, not that you're in her head or
She would have
campaigns, but
got booed so hard.
okay, all
Was
right,
spot
is
on
it as
that.
simple as that? Just that she knew that's not my crowd and it's just, this is going to hurt me. I'm going to get up there and get booed and it's just going to be a PR disaster. So why?
I mean, to
Okay,
me, that would be the most obvious
okay,
reason. Like, no, and people might have thrown rotten fruit at her at our
right,
conference.
okay,
Like,
okay,
she has just been, or I guess it's not necessarily her, it's the Democrats, but
right,
she's supported those policies. And maybe people would have been a lot more civilized than that. I heard people talking about it or joking about it, but I'm sure no one really would have thrown fruit. But she has not come out with any crypto policy. Like, it would be, what could she say about it? We're going to keep arresting your developers and trampling all over your constitutional rights. And we're going to try and make crypto, only accessible through a regulated platform. That's her policy. So.
okay. So for people, the bit average, and again, I know, there's exceptions and everything. It's not that we're saying everyone who likes Bitcoin is a Republican or whatever, but
I find it so funny when I meet these Bitcoin Democrats, though. Like, how do you come to that conclusion? I don't know.
but are they, so what I'm trying to isolate though, Sasha, is it in terms of like the hostile climate? So that is particularly something that happened under the Biden administration. Is that what you're saying? Like, was there a marked change from like how things were regulated under the Trump years versus the switch to Biden?
Well, Dr. Murphy, that's the narrative Trump likes to say.
Sure.
He's changed his stance on Bitcoin. He's now a pro Bitcoiner. But actually, right before he was about to get out of office, Mnuchin, under Trump's, assumed approval, put forward a bill through FinCEN that would have made Bitcoin have to be regulated as a money service business. So you couldn't do non-custodial transactions on a ledger. It didn't go through because it was right in the middle of the administration change, and so it didn't happen. But it was, it was put on the table that. But now he's come out and said, like, very bold statements like, "I'll keep Elizabeth Warren and her goons off your Bitcoin." And during his talk in Nashville, he was very much promoting that it'll be non-custodial. Miners are going to be free to mine here in America. They're going to be encouraged here, as opposed to like the Democrats that might put some kind of ESG restrictions on miners. And Kennedy really went into mining too. Him and Trump both talking about how it's actually an environmental advantage to have the miners here in America because they're constantly they're so aligned to find the best and most renewable energy. They're doing all this flare work. And so it's, I was kind of worried Kennedy might be like on that ESG tip of like, oh, don't, Bitcoin mining's not worth the energy or something like that. But he absolutely understood it is worth it and it can be done somewhat sustainably. I mean, if you look at the amount of energy data centers take is more, comparable, I guess, to Bitcoin. But
okay, so let me just repeat back what I think you just said there. So, and that's partly why I asked this, because I know like Trump could have pardoned Ross Ulbricht, when he was in office, he could have done it that, so I know with some of this stuff and Trump only recently learned what a CBDC was from Vivek. And so, or at least that he was one of the early ones. So it's not that in the Trump years when he was in office, it was smooth sailing necessarily, but it is a fair statement to think that the current Democratic establishment is more hostile to Bitcoin and particularly Bitcoin mining than the Republicans, or at least if we look at their rhetoric.
Yeah, well, I mean, Biden proposed a 30% tax on Bitcoin miners. So that's how he feels about them.
Okay. And there, the rationale, I guess it kind of all rolls up into their, corporate greed and big fat cats. It's, it's not like the blue collar worker goes into the Bitcoin mines every day and comes out with a bunch of Satoshis. Like I could see how given the Democrats' rhetoric that, the taxing Bitcoin. And then too, because it uses the ostensible issue is because Bitcoin mining uses so much electricity that if you are against carbon dioxide emissions, then that would be something too that would be a strike against it in the standard progressive worldview. And so that's why it would fit in that the Democrats, it would be a natural thing for them to oppose or want to heavily regulate Bitcoin mining and tax it.
Yeah. Well, companies like Ripple too, they have a campaign. They funded Greenpeace for this campaign that says change the code. And Ethereum recently changed its code from Ethereum used to be proof of work mining, and it changed to proof of stake mining, which most Bitcoiners say that is not nearly as secure and would never work on the Bitcoin network. But these companies like Ripple and Greenpeace and the World Economic Forum are saying that Bitcoin can change its code and it could go to proof of stake too, and that would be a lot better for the environment. But it's just not possible. And I don't think the miners would ever vote for something like that because miners are incentivized by fees. One, if it was changed to proof of stake, Bitcoin wouldn't be worth nearly as much. So their mining equipment wouldn't be mining as an asset that was nearly as valuable because it didn't have the security features of proof of work. You don't even mine proof of stake. So that argument, that's really moot, but the miners would be all out of business. But they have to vote to change the code. So there's no way they would ever vote to put themselves out of business.
Okay. And so what you were saying with RFK Jr. was his point, or one of the points he was making is that, hey, if you're going to have mining, given that there's going to be operations consuming a lot of electricity, you probably want that to be generated in the United States where it's going to be like, clean natural gas or something, not in some other place where it's going to be coal-fired power plants. It's, in other words, if mining doesn't happen in the U.S., it's not like no one around planet Earth is going to engage in Bitcoin mining. It's going to migrate elsewhere. And then given that there's going to be lots of electricity generated, where do you want that done? And so it's not obvious that, offshoring it away from the U.S. is good for planet Earth.
And there's another feature that he talked about. Well, I don't know if he talked about it in Nashville, but I've heard him talk about it. And it's something that was talked about a lot actually I did this legal CLE day at the same Bitcoin conference, and they had some attorneys that were really focused on Bitcoin mining. And they were talking about how it actually stabilizes the Texas ERCOT energy grid because the Bitcoin miners can turn off anytime. Like if it's a peak, the grid will call the mining companies and say, hey, turn off. And they do. And when there's not enough demand, they can plug back in, and it works as a stabilizing mechanism that's really been beneficial the last couple of years for Texas.
Okay, yeah, I didn't even think of that. So yeah, just for the listeners at home. So I didn't know the mining angle, but I did know that part of the issue, with getting these grids up and running is that to design them such that, like at noon in Texas, in the middle of a work day in the middle of July, that there's a lot of electricity consumption because everyone's air conditioners blasting. And so if you have a grid that's able to, produce there at those peaks, and what happens too, if it's a cloudy day and, the wind's not blowing, like to be able to handle a situation like that. But then, when there's a downtime, and so it's a trade-off between, having all this capacity that you only use once in a while. And so like you're saying, Sasha, to make that work, they would like it to be that, if we had something that generates a lot, or requires a lot of electricity, but that it can shift when during the day they do it, that would make their lives easier in terms of the economics, that then we can, build less capacity overall that's used more often. Or so it'd be better to have lower capacity that's always at 95% rather than have a bigger capacity that, most of the time is at 60%. And then once in a while, it's really high. That's pretty
exactly. Yeah.
So, if you could just move that around. So, okay. Very, very good. And unlike, when the AC needs to be blasting, that you can't just say, well, how about at 2:00 in the morning, we'll blast the AC, but not at noon. That doesn't really work. Whereas we can, mine some new blocks later today when it's cheaper in terms of the electricity.
And even like the data centers, they can't turn off for a minute, but the miners can.
Right. Okay. All right. Well, that's interesting.
And then just one more thought on that mining topic is the same rules that have been proposed by number of times now, and luckily none have passed, but there's been several attempts by the Biden administration, and I already mentioned the attempt in 2020 by the Trump administration to make Bitcoin, hosting your own Bitcoin node or, holding your own assets illegal, or that you're going to have to hold them on some custodial exchange. But both Trump and Kennedy have said they wouldn't do that, and Kennedy went one step further with his tax plan, which was really kind of funny. So all these ETFs have exploded in the Bitcoin space, and now in Ethereum too, and they're talking about getting a Solana one. I don't know where the line will be drawn. We'll have Pepe ETFs coming up, meme coins and stuff. Who knows? But the ones that are there now, they've had significant inflows and they're automatically considered a security. So they'll be taxed as capital gains the same way any stock would be taxed. But with Kennedy's proposal to make Bitcoin tax-free, the exchange from Bitcoin to a US dollar, that would really encourage people to hold it through BlackRock, but through their own node at home. So he was trying to put a policy in that really encourages decentralization and self-custody, because Bitcoin, really the overall purpose of it is to be held, to be able to send it in case of an emergency. You don't want to be relying on that third party.
Right.
So
right.
I think I really loved the way he explained it with the tax side.
Okay, great. Yeah, I mean, like the original white paper itself, it's a peer-to-peer item. You know what I mean? So it kind of defeats the purpose of doing that if you give your keys and some central third party holds all your stuff on your behalf. That's kind of like, well, just use a regular bank. Then.
Just use a bank. It's a lot easier from a tax side.
Right.
If you're going to do that, yeah.
Right.
But I guess there's still been upside, gains in the asset, whether you held it on your own or through a centralized player.
Right. Yeah. I mean, that's something we bring up, Sasha, just, a lot on this podcast is the purest vision of no, everything's got to be completely decentralized or else it defeats the purpose, or just everything completely centralized. And is there any role for a hybrid of, like semi-public chains and things like that? So we do, a lot of our guests talk about that stuff. So, and that's interesting too, because what you're talking about, RFK and the tax issue, that's something in terms of like, ever since the mid 1970s, you were allowed to own gold and silver again, whereas for a period as a U.S. citizen, or you couldn't hold gold, I should say. And then, so the question that Austrian economist types get a lot is to say, well, how come people don't go back to using gold as money? Like, I get it. Yeah, FDR, threatened to put them in cages, and that weaned them from gold back then. But now, why couldn't you just start doing that? And one of the issues in terms of the policy roadblocks, like how come just a bunch of Americans just don't start working for gold coins and buying things in gold coin and just have their alternate little monetary system? One of the roadblocks is just the capital gains stuff, that if you got paid, a certain amount of grains of gold for an hour of labor, and then you held it, and then 2 months later you went to go buy a television with it, if the dollar price of your gold had risen in the meantime, you would have technically owed a tax on that. Mm-hmm. And that kind of is a damper in terms of why couldn't people just start using this as an alternative to the dollar, at least if you're in the U.S. jurisdiction. And so that's why I know lots of states that are like trying to be havens for hard money are coming up with exemptions to say like they can't control what the federal government does, but they can say within the state here, we're going to exempt, if you're sitting on gold and silver coins, then we're not going to tax that as a commodity that went up in value. So I guess what you're saying is RFK saying the same thing for Bitcoin, to try to allow people the freedom to embrace that as a medium of exchange.
Mm-hmm. He'd probably do the same thing for all commodities. Mm-hmm. I mean, wouldn't it be if he made that rule for Bitcoin, it would also apply to gold, by the fact they're both considered commodity assets.
Yeah, I mean, I would think so, but yeah, again, I didn't see the specifics of what he said.
Yeah, he didn't talk about gold.
Yeah. Also, too,
it would make sense for it to happen for both.
But do not underestimate the ability of the tax code to not make sense. So
yeah, that's true.
Okay, well, is there any other pressing issues that's on your radar in terms of what you've been talking about lately that you want to discuss before we wrap up here?
Well, geez, I was remiss not to even mention the Free Ross movement and all the steam it's got going behind it right now. And you kind of brought up that Trump had the chance to free Ross during his term. But from what I understand from his mom, Trump had signed something that was going to free hundreds of people on the last day. But then that January 6th, all that situation was going on and it didn't happen. So maybe why did he leave it to the last day? But I guess that's the typical thing that most presidents do with all their presidential pardons. Mm-hmm. That's what I've heard anyway. But
okay, so maybe I was being a bit too cynical. I mean, even there, I was just repeating.
I'm cynical of it too.
Yeah. Okay. All right. Fair enough. So,
but I know from his mom, she was very hopeful that he was getting out on the last day that
Right.
Trump was in, or he was
Mhm.
getting, something was happening. He might not have been getting out, but he was getting a cap on his sentence, or
Mhm.
there was a major positive thing promised by Trump that didn't get to happen. So now Trump has said he'll free him on day one, and RFK Jr. is also saying that. So we haven't heard any, I'd be shocked if the Biden administration came out, but I actually made an X post when we were at the conference because everyone was wearing these Free Ross Day One shirts, or Vote Trump, Free Ross, or Free Ross Day One. But, basically it was like right in every politician and every media outlet's face, this is a big issue for everyone at this conference. Once, everyone supported that Ross should not be in jail anymore. I said, well, at one point it looked like Kamala was coming to speak. Everyone was, there was a big rumor that we knew the invitation had been, put out, but no one knew if she was coming or not. And we said, well, she could really steal Kennedy and Trump's thunder if she just made a call on stage. All she would have to do to really win the crowd would be like call and say, hey, free Ross right now. And, get him on a plane over here. Yeah, but she obviously didn't even come or hasn't made any statement about crypto. But it was, that was one of the best things about the conference was all these T-shirts and everyone had stickers, and it was just, I feel like Ross has gotten forgotten over the years at conferences. Right. There's so many new people, like anyone that was in Bitcoin in 2014 or before know all about the Silk Road and all about Ross's trial. And most people, everyone I, know thinks it was a complete miscarriage of justice. And then fast forward 10 years or 11 years, he's been in jail. A lot of people are new to crypto and they just don't know the history there. And now after that, if they attended that conference, they know. So that was really cool.
Okay, great. Yeah, for people, if this is not on your radar, I'll link in the show notes page to this InFi episode, folks. But on a separate podcast years ago, I interviewed Lynn Ulbricht, Ross's mother, who was intimately aware and followed the trial very closely, of course, as it was unfolding. And, and I tell libertarian types, if your attitude is like, oh, I'm sure, I don't think that the stuff should have been illegal and I don't think she'd be in jail, but, you go ahead and break the law. What do you think's going to happen? And no, that like the stuff that the rulings the judge made where like this was a complete travesty, and just the fact, what do you get, like double life sentence or something? And,
double life plus 40 years.
Yeah, double life plus 40 for running a website. And, mass murderers don't get that much in terms of sentencing. Like, this is crazy. So clearly,
it was a kingpin. But again, it was the conspiracy charge that really, it's like you didn't actually do drug dealing, but you conspired and, conspired to help other people do drug dealing with the site. So,
yeah. So in any event, but again, as like his mom would say, Pablo Escobar conspired to deal drugs and he didn't get as much.
And he actually dealt them and he killed people.
And killed people too, which
there was real
is frowned upon.
And, problems from in-group violence, but this site had no violence that was ever.
So anyway, like I said, it's not merely that, in a free society, this stuff wouldn't be illegal. And so he should be, like the actual administration, even according to the state's own rules and stuff, what happened in this trial is just shocking. And so if people are interested, then I can link it that I interviewed Lynn a few years ago and she just, walks through pretty methodically some of the things that happened there. The SEC versus Ripple. Can you just, again, just big picture if that wasn't on somebody's radar, just explain what that was about and what the recent development has been?
Yeah, so Ripple was sued, I think it was back in 2017, and they were accused that they had sold unregistered securities. And the Ripple price, it had gone from, mere cents to $4 during the 2017 ICO bubble. And then after they got this lawsuit, every exchange delisted them under fear that listing this thing the SEC has accused of being a security might rain terror on their own regulatory stance. And then Ripple hired some of the most amazing lawyers out there. At first, they had Betty Jo White, the former SEC chair, and they've just, put up this amazing legal defense, and it's lasted 6 years now. And finally, we have a closure to the case where they've determined that the Ripple XRP tokens are not securities, so they can continue being sold on regular exchanges like Coinbase. So had the determination come out the other way, they would be permanently delisted until they could register with the SEC as a security and get listed on stock exchanges that are already regulated as national securities exchanges. So Ripple still had to pay a fine. The SEC found that they did sell unregistered securities to one group of people, to the institutional investors, but that the secondary market sales were not securities. So it was overall a win for Ripple, but took 6 years and
Sure.
millions of dollars to defend against, probably.
Sure. So for the people at home that, again, the big picture here is, I'll do a real standard example, like a share of corporate stock is clearly a security, whereas, a barrel of oil isn't a security. It's just a commodity. It is what it is. It's not a financial instrument. It's just a thing. And so then when it comes to, sort of intangible blockchain related assets, it's not as clear, well, are those things securities or not? And so the current understanding, and I think it lines up with standard economic theory, is like Bitcoin is a commodity, actually, even though it's intangible and it's electronic and it's it's a weird kind of, it's a ledger entry and it's abstract mathematical stuff. But if you have to put it into one of those buckets, it's a commodity, just like a bar of gold is a commodity, right? So people understand why that is. But then when you get into other types of, crypto assets, if something is a token that represents underlying assets, well, then maybe that token is a security. So anyway, this is just the kind of the thing we're talking about. So Sasha, the big picture, are you saying that this ruling makes people in this space more comfortable that things that were in the gray area, maybe now it will more lean towards they're not securities? Is that safe to say?
That's safe to say, Bob. Yeah. Or Dr. Murphy, sorry.
You can call me Bob.
But yeah, basically all tokens now that had a similar start to Ripple, which is anything that was basically sold through an exchange to end users, can rely on this case and say, hey, we're the same as Ripple, and that wasn't a security. And before this case, everyone kind of lost to the SEC on this issue of whether or not a token's a security, because the SEC was using the Howey test, saying, if someone spent money, it's like, there's 4 elements: the investment of money into a common enterprise with the expectation of profit from the efforts of others. I feel like in crypto, we've been talking about that for years, but now finally they've got more than just this abstract test to go on. There's an actual case law of a company selling tokens to retail and winning. And before this, everyone just settled with the SEC and paid fines or lost, like in the case of library.
Okay, great. Maybe we'll do the other sort of technical legal one that you had sent me this story that, this recent news about the Fifth Circuit and this geofence warrant issue. Can you maybe wade into those waters and just give people a general idea?
Yeah, sure. So the Fifth Circuit, which covers, which is it? It's Texas, Louisiana, one other place. The Fifth Circuit recently held that in United States versus Gemar Smith, that geofencing warrants are unconstitutional, violation of the Fourth Amendment. So, all the warrants that have been used over the last decade, like that's how they got Ross Albright, was a geofencing warrant. Everyone in the January 6th.
Again, Sasha, let me just stop you for, there are some people out there, they don't even know what geofencing warrant is.
Sorry.
So can you just, and I may be one of them. Go ahead.
Well, a geofencing warrant is when the government will request a search warrant on a location. So in typical olden times, when we're dealing with brick and mortar before the digital age, they have to have quite a bit of particularity before getting a search warrant for, say, a business. They have to know who they want to search, the name of the person, and they have to have some kind of probable cause that's, beyond some, a reasonable
Yeah, because
standard.
the guy looked kind of suspicious. He looked like he did something. So yeah, we want to search his house.
Mm-hmm. And the way that the technology has worked from a marketing perspective, these stores, they all want to know who's nearby, who can we send a targeted advertisement to. Like, you're walking by a McDonald's, they want you, they have some type of technology that picks up the Bluetooth and the Wi-Fi signals on your phone. And they say, their phone carrier allows this. And they say, okay, this person's walking by. We know she likes X, Y, and B meals at McDonald's. So let's show her an ad right now of a chicken burger. And now then the police go and they subpoena this information. They don't have to have nearly the same particular information. They don't need to know the name that they're looking for or give nearly the probable cause. Like they just say, hey, we're interested in this. And when this data is coming from places like Google, they are searching a 594 million user database for names. And so the case in this one, which, I think finally someone is, doing the right thing here to come up with a ruling like this. But that's, such a far departure from what search warrant rules were outlined before the digital age. So now they're saying you can't get this blanket geofence warrant and look through everyone that was in a certain location's phone, not looking through their messages or anything. Maybe they do. But what we know about is that they at least know that you were in that location through the warrant. And then if they find that, a target, like there is a suspicion, then they can probably say, okay, well, he was there. Let's look through his text messages. Let's look through his photos. Let's look at more of it. But basically, it's a blanket search warrant.
Okay, I mean, is it, and maybe, I don't know if this analogy is, tell me what you think of this analogy is for people trying to understand. So it would be like if the government, rather than saying, yes, we have reason to believe this particular guy's working with the mafia, and so we want a warrant to, follow him around and photograph him, and then if he goes into this office place, we want to go in afterward and search it, and you got to get a judge to sign off on all that. And why do you think he's with the mafia? Well, we have, and here's all the reasoning, our evidence that we have so far. So that's one thing versus like if there's a traffic camera that's on the block where that guy lives and they say, we just want to have access to that camera's footage and just see everything, or a private security camera for like the building owner. And they just say, we just want to get all that footage. And so they can see not just stuff pertaining to that guy, but anybody coming and going, and just to have a wide net. And so like with this, you're saying right now, the cell phone networks just have probably a lot more data on us than most people realize. And that thus far warrants allowed them to get at that. And now they're saying, no, that's way too broad. You got to be more specific.
Exactly. Yep. Your analogy of like just looking at, the few minutes in time that the suspect was in the video camera versus, 24 hours of straight footage of many people.
Right. Everybody coming and go. Okay.
Mm-hmm.
All right. Great. Okay. So I mean, probably obvious, but just to make sure you finish the train of thought. So they're here too. This is for those concerned about individual liberty and, Big Brother's watching you kind of stuff. This is, this ruling has been applauded, that people think that, this is going to sort of be a bulwark against just fishing expeditions from the authorities, just looking for something somebody might have done wrong.
Exactly. Yeah. And there's 2 other cases that are going up that are now going to have to look at this ruling, and the judges there will have to take this into account. They're not bound to use it, but they can weigh in on it and they can cite to it if they want. Like it's going, there's a case going to the Supreme Court and there's one going in the Fourth Circuit in the next couple months. So it could be, if the Supreme Court, upholds it, it'll be across the whole country. No one can do these search warrants anymore, which would be law enforcement would find they'd have to do a lot more work to get information than this very simple way to search through these records.
Yeah. And then putting aside the legal issues for a moment, just again, this underscores, I mean, it may be that some people were surprised by your anecdote to motivate that if you're walking by a McDonald's, your phone knows that you are walking by a McDonald's and it cross-references and knows, oh yeah, the last 20 times she went to McDonald's, on 17 of them, she got this sandwich. So let's show her an ad for that. Like that's even without the government coming in and looking over their shoulder. That's kind of creepy. I think probably to a lot of people.
It's super creepy, but it's, it's what's happening.
It's ubiquitous. Yeah. And everybody, it's, there's a lot of stuff. I'm sure you know this, Sasha, but just about how much like if you have a newer car, how much your car knows about your life is probably would be alarming to most people. And not just that the car knows, but that it's obviously transmitting it to other entities that can use that information. Okay, well,
and the ring cameras, everything. Oh,
yeah.
God. I hate all of it. I just wish we lived in the 90s still sometimes. I put my phone on airplane mode, like sometimes if I just don't feel like being tracked. But really, that's so inconvenient because usually you need the, maps or whatever to drive anywhere.
Yeah, the music was better back then too.
Yeah.
Okay, I'm just listening. Okay, another big ruling. So the CFTC settled the FTX and Alameda case for, was it $12.7 billion? Any comments on that?
Yeah. So, well, I think it was good of the SEC in the way that they did it, they subjugated or subverted their claim under the actual FTX users of the platform. So whatever money that, if there's any money left, they'll get paid. But they want all the money that is raised under their fine, the 12.7 will go to the users. And everyone in that case has started saying, oh, these users were made whole. They're getting 100% of their deposits back, but that's really not true. It's a misleading way that people are talking about it, because these people, FTX sold everyone's Bitcoin at its all-time low of the market, around like $20,000 price. So they're getting paid back at that price level, not today's price of Bitcoin. So
so it's being construed just
60% loss.
Okay, so just so I understand, so it's being, the way they're classifying it is like, at the moment that effectively those people were stolen from by FTX and its agents, what we're making whole is just giving you back the market value, as if they're not giving them back the Bitcoins.
Right.
In other words, they're just giving them back the dollar amount, the market value of your Bitcoins at the moment the theft occurred. And so, as you're saying, no, if they had held it all along, they would be worth much more right now. Mm-hmm. Okay. Are there any lessons that people are taking for this besides just don't do business with a scam artist? And if someone's saying ridiculous claims, probably don't believe them.
Well, yeah, I think that's the big one. He really fooled everyone in the industry. Even, I did one minor transaction with him, like where he invested in one of my clients' companies, and I was in awe of him, thinking he was, this genius and stuff. And then a few years later, all this came out. I was like, oh my goodness. But yeah, I think the lesson is not your keys, not your coin. Like, you can't trust anyone. Mm-hmm. And what's interesting with his case too, and the CFTC, is he was really cozied up to the CFTC, proposing all this legislation that would have given the CFTC complete regulatory power, it would give them spot regulatory power, not just power over futures trading. Mm-hmm. So it was written so broadly, like it would basically give them power over all spot commodities, not just digital ones too. So like, without, maybe unintentionally or intentionally, they're taking this giant regulatory step that they don't have control over right now. And for the digital commodities, the proposal was that they would all have to trade through registered platforms, like FTX was planning to be that registered platform that could hold all digital commodities. And then he was fighting to, make it so there's this big barrier to entry that you have to get this CFTC registration in order to let any of these tokens get listed. And he was proposing that, and everyone was cheering for it at the time. And even still, there's been similar bills that have come forward this past year. None have passed yet, but that would also say the CFTC, basically would say, now that the Ripple case gets in the way of this whole plan, because if the tokens are not securities, there's no issue with the current exchanges. But the plan would be that all the centralized exchanges would have to register with the CFTC, and all these tokens would be deemed as commodities. So I guess the Ripple case, wouldn't really get in the way of it, because those Ripple tokens are now considered commodities too, essentially. And then the CFTC would oversee the whole market of it. And then it wouldn't be able to be traded on anything that wasn't registered. So there's a big market of DeFi, and even just Bitcoin, when people hold it on their ledger, that would be, holding it outside the rules. And so it could be, it was a pretty bad regulatory proposal that SBF put forward, and it's still trickling around. So I really hope that doesn't end up passing.
Okay, great. Just your offhand remark there about how, you were somewhat sheepishly admitting that, you two were taken in initially. If you don't mind us just pulling that thread a little bit, because like with the housing boom and bust, after everything blew up, there were a lot of people in the financial sector that were kind of like, oh yeah, I always knew that was a bubble. And so it was refreshing when I would talk to some bankers and whoever who were, admitting, yeah, I was totally involved. I put my pension in there, and I had a bunch of clients, hip deep in that stuff. And I knew it was probably a bubble, but we thought we could get out in time. And so, like, do you mind just commenting on, what was it, the fact that he was young and that actually he was kind of weird? And so it was like, oh, well, if someone were an eccentric genius, that's what they would look like. I mean, do you have any thoughts,
It was that
obviously it wasn't just,
the
like lots
the
of people
amount of
fell for
money
it.
he was
Yeah.
swinging around,
Okay.
like he was investing a huge amount. So it was like everyone just wanted to make it as easy for him to give that money to the company as possible. So it was like
Wow.
no one, it was just, I think it was just the amount of money he was investing across the board to all these places that made people feel like he must be, someone very intelligent and which is, now you're right. That is kind of, it maybe should have been more of a red flag of how much he's investing compared to what other people were willing to put in. But it just seemed like he believed in the space. He wanted to fund all these companies and allow them to grow. That was my impression then. Now looking back, it's like he was trying to get sway with the same way that he was going around giving these political contributions. He did the same thing with crypto investing and just basically bought alliances from all these companies.
Okay.
That
yes. I mean,
bought
I
into
could.
the dream that FTX was a great exchange
Right.
and someone to be partnered with. And for these smaller companies that were taking the investment, it kind of gave them some credibility to be like, well, Alameda Research thought we were worth,
Right. I got you.
investing in. So, other people should too.
Okay. Yeah. So it wasn't like once they got to that level of influence, it wasn't just the direct money they could pump in, but then that was a signal that then might lead to more
then
money.
more
So like
people
it
would
kind of
trust it.
leveraged, magnified their influence, and then the self-fulfilling prophecy where if everyone thinks they're significant, then they are. Okay.
Yeah.
Okay. That makes sense to me because partly why I wanted to ask you is because I know, like, if somebody, it makes sense that somebody who's very politically, democratic or whatever, and if they're investing because he was throwing money around, why they might be biased. But I just know, people in general who are not, into partisan politics and whatever, that if they fell for the illusion as well, just to understand, after the fact, like what the heck just happened there. I mean, just to give a different example, like I wasn't into Bitcoin, like when the Mt. Gox meltdown, happened, but I was stunned when I learned that what that stood for was the Magic the Gathering. Like that's what Mt. Gox originally, and I was like, you had grown men like giving their money to that. Like I was just surprised that, that things grew out of that. So anyway, with some of this stuff, after it blows up, it's like, oh yeah, what were you thinking? But at
hindsight
the time,
is 2020. But the excitement and everything going on, when things are happening.
Yeah, and the dangerous phrase at this time is different.
Yeah.
So, another element here on the radar is the Bank Secrecy Act and FinCEN's move to say it's no longer relying on the 2019 industry guidance that it had issued, the relevance to non-custodial software. Can you maybe speak to that?
Yeah, so there's been a few cases this past year where, well, particularly like the Tornado Cash case and the Samurai Wallet cases, where these
Again,
are
can you just, for somebody who
non-custodial.
doesn't know what that stuff is, can you just give the real quick version?
Sure, yeah. So Tornado Cash was a mixing service on the Ethereum network that allowed people to basically make their transactions anonymous. And throughout the transactions, there was a very small portion was actually used by terrorists. I think the North Korean hackers group and some others, but it was mostly used for legitimate things of people, just wanting to do Well, I don't know the full use. I've heard that stat. I don't have it, at the tip of my hand, how much was used by criminals and how much wasn't. But my understanding is it significantly more was used for legitimate purposes and people just wanting to donate to charities without being known who was making the donation or any other reason why someone might not want their name associated with their financial transactions. Like there's a lot of legitimate reasons you don't want blockchain information to follow you around how much money you have and who you're giving it to. So they were using this mixing service and the founders got arrested and they were in Dutch court. And so basically these developers, they never held anyone's funds. They never took money into their custody, anonymized it, took a fee for doing that service, and then sent it to a third party. Because that's what money transmission is, and that's typically what the laws around money transmission regulate. If you're holding onto someone's money and you can steal their money, then at least in the US, the rule is you need to register with FinCEN, have an AML policy in place, and collect KYC on everyone using your services. And you need to let the public know who you are so that you can be accountable if you do steal their money. But when it's non-custodial software, in the 2019 FinCEN guidance, they clearly stated that if you're not taking custody of assets, then it's just software and you don't need to register with FinCEN as a money service business or a money transmitter. You don't need to register. So that's all these people were doing in both cases was I think, at least in Samurai case, they had a non-custodial software wallet that offered an anonymity service by mixing, but they did take a profit. It wasn't crazy over the years. I think it was like $1.3 million that they made or something around that number. But, FinCEN is saying in that case, since they were taking a profit, they were more than a non-custodial software provider. So yeah, these two developers, or I guess it's four, two companies with four developers are getting charged with conspiracy for money laundering. And, the conspiracy charge is what's really dangerous and could present a terrible slippery slope because you don't have to even do money laundering. You just have to conspire to help other people do money laundering. So by knowing that some criminals are using your software, you are now knowingly helping those criminals engage in their criminal enterprise. So you've engaged in this conspiracy and you're guilty for like 20 years jail or 10 years jail. I should look it up and confirm to you, but it's a
I don't want it either way. Yeah. It's not a good outcome, whatever it is.
Yeah, terrible outcome for them.
Yeah.
And they're all like, people that are beloved in the crypto community and just, in my opinion, absolutely don't deserve to be behind bars.
Again, just for me to like take what you said and make a perhaps goofy analogy, but my understanding from the tornado case in particular and them going after the developers who, like you say, it's like they were actively running something where they were receiving, people sending Bitcoins and then they were bouncing it around and then sending it out to the other end. No one could figure out, they connect the inputs and the outputs. They were just, writing the math, the code that would allow others to implement that, but they actually weren't involved directly. So is this maybe a good analogy, or tell me if it isn't, that it's like somebody making suitcases and then out of 1% of their sales, drug dealers, use it to put $100 bills in to give it to other people, to launder their drug profits, and then going to the suitcase manufacturers and saying, well, no, because some other people are using your product for this nefarious, even though you personally are not directly involved in any way, you should have known better before you made these suitcases because, come on, you could put $100 bills in these things and walk around with $100 bills in a suitcase. So why did you make this product? I mean, is that
that's
kind of sort of?
That's a good analogy. The other one I hear people say, which I think is like visually kind of a cool way to look at it, is like a highway. The non-custodial software is like a highway for cars to drive on. So saying, hey, you built a highway and you should have known that people could use that for illegal purposes. We're going to put you in jail. So it's dark when you think where the law is headed on these things. Well, not really, because we've had a couple good wins, and Trump stacked the courts during his term, and that's what determined the case about the Fourth Amendment search and seizure, the geofencing, were two Trump-appointed judges. So it's not, I think people are just getting sick of hearing about rights being violated over and over for things that used to be, for all of history. Actions that were fine are now becoming illegal under this last 4 years of administration.
Right. Oh, okay. Well, maybe that's a good segue then. Your remark there into just, the upcoming election or the ongoing election that we have right here, or campaign, I should say, the election's upcoming, and just, your thoughts. And again, we here at Infineo, folks we have guests on, they can speak their mind. We're not endorsing things, but I'm just curious, Sasha, as to what your take is in particular. Yeah. Like, do you mind elaborating, like when Trump was appointing people, like people in your line of work, were you thinking like, oh, these judges are really solid on the issues we care about, or were these rulings a surprise, or, just any kind of commentary like that?
Yeah. I just remember hearing throughout his term that he was appointing a lot of judges, a lot of Republican judges. And I just thought, okay, that should be interesting to see what changes, because that's the ultimate law, comes from all these case law that are around the circuit court, around the whole country. And if everyone has a bit of a shift in their approach to things, it can really shift the whole attitude or the whole legal stance of the country. And it seems to me these Republican judges have taken a lot of steps, in a Republican direction, which I'm usually in alignment with the recent decisions, but especially this one with the geofence tracking and the Ripple case too.
Okay, well, Sasha, thanks so much for your time. Folks, my guest has been Sasha Hodders. Sasha, thanks for all the work you do and letting us into some of these recent developments.
Oh, thank you for having me on. It's a real treat. I really enjoyed meeting you on the cruise all those years ago, and nice to keep the conversation going. Thank you.
Oh, sure thing. Thank you. And folks, she's referring to the Contra cruise, which was a cruise that Tom Woods and I would host, in which we would, it was based on our podcast where we critiqued Paul Krugman's writings. It sounds obscure and that we're just making a joke, but no, that really did happen. And thank you folks for tuning in. We'll see you next time.